Today was a really quick trading day, and unfortunately, it wasn't the best for me. I ended up taking two trades, and I got caught in the drop. And yeah, you already know how that ended. Took two losses on the day, and I'm down $1,000 on both of my combines. So let's get into how I took these trades and why price played out, how it played out. So as you can see, price has just chopped until we had a leg out. This will more likely be the manipulation of the range. As we can see, price has pulled back to 50% of this 15-minute fair value gap, and now it's likely to just have a massive displacement leg to the downside. Now, I'm not too annoyed about today. Obviously, I took two trades. Obviously, they're both losses, but yeah, first trade, valid loss, minus 300. Second trade, not so valid loss, minus 780. So I'm down 1.08. I'm down 1,800 on 1,080 on both combines. So let's get into how I took these trades. Now, today was just a day to sit back, wait for the most primal entry known to man. Wait for the most confluential. Wait, nah, you can't say that. Wait for the most high convictionalized point of entry and just take the setup, man, because unconfidence won't get you anywhere in a market like this, but overconfidence also will result in losses in a market like this. So going into the day, we can see that the high time from SMT is still holding with YM. YM takes all-time highs. NQ and ES don't. I feel like I've said that in every single bloody video recently. Anyway, high time frames were bearish today. Low time frames were bearish today. You might ask, Kirby, why are these highs not your draws and liquidity? We're in a downtrend, bro. We're in a downtrend. We aren't ranging up. We're respecting this for value gap. But more so, we're holding our high time frame confluences. I hate the fact that Top Step X makes you do that every single time. But anyway, look, we're holding a high time frame external SMT. We're holding a high time frame internal SMT. Both daily candles are holding SMTs. We took previous day high here and previous day high here. What happens after previous day highs are taken? The target becomes previous day low. So as soon as previous day's high gets taken here, you want to see previous day low get taken here. And that's just the natural rhythm of the market. It's almost like ping pong. When you've got buy side liquidity and you fill that model, you want to see sell side liquidity get taken. But anyway, internally, why was I bearish? We've got an internal high time frame S&T get taken. Double previous day highs get taken, leaving both of the previous day lows resting. Come on, man. Like, why would you not be bearish? Why would you not be bearish? The only part where you can't be bearish is just if you want to avoid the chop. If you want to avoid the chop, you don't even need to trade today. But obviously that wasn't the case for me. So look, price ended up having this fuck off Drake candle to the downside. Do not ask me why it happened. I haven't looked it up and I don't plan on it. 241 points to the downside. That is mental. Mental. Now, days like this, you can get away with avoiding them. I mean, when you have a displacement candle like that, you've got the option to take the day off, innit? And I chose not to because this high time frame, drawn liquidity, was resting. ES took it, I know, which meant that there was an SMT holding here. But if we are externally and internally bearish, why the fuck would I even mark this out? Why would I even give any consideration to it? And that's exactly what I did. I don't care about this S&T because it has nothing to do with my bias and it has nothing to do with what the high time frames are showing me. Not what I expect to happen, what the markets are showing me, you know? It's a, what do you call it? Trading isn't about just guessing. It's about seeing what price says, seeing where probability is, because some people say this stuff is gambling. If you've got a proven strategy with a proven win rate, don't know where the gambling is in that, and past experience tells me that this is the main drawn liquidity. So what do we want to see to enter a trade? We want to see an S&T, CISD, confident drawn liquidity, and an internal manipulation. Now, this is my confident drawn liquidity. I've got my external SMTs here, but I also need internal SMTs. So price ends up trading. So obviously market opens there, and automatically we're just going to move into this 15-minute fair value gap. That is expected. That is what probability says. Now, do we need to have a reaction off of this fair value gap? No, we don't. Are we going to have a lot of chop after reacting to this fair value gap? Yes, we will. And that was my mistake today, honestly. I could have sat out. I could have not traded, but I'm not here to complain about the shit that's already happened and that is out of my control. So the way I got into these trades was this high was swept on every single chart. I then ended up drawing out equilibrium of this displacement leg. And as we can see, equilibrium aligns perfectly with this rejection. So we take this liquidity and we reject lower. Now from here, you can still expect some chop. We're not just going to have a mad displacement to the downside, because as people say, even if this is your model, it's too plumb. And when something is too obvious in the market, it will scream manipulation. When something like this happens and you see your CISD, you can still enter the trade, innit? Like, enter the trade in here, stop loss here, take profit here, flipping break even there. Obviously, you lose nothing in this trade. You'll just get stopped out of break even. But what I'm saying is, when something is too good to be true, it is too good to be true. On the markets, when a lot of people want to sell, the banks want to buy. When the banks want to sell, anyway, you get the point. Like, shit like this is just too obvious. We've got internal low resistance liquidity resting. We've got an external draw here, CISD, S&T. So let's get into the first trade. First trade I took was flipping, let's go to the 30 second. It's like here, I think. Something like that. So we go to the 1 minute chart. We can see that we've got our S&T in place holding after rejecting off of 50% of the range. Where's the internal manipulation? The internal manipulation is right here. Price ends up going through this 1 minute fair value gap. What do people want to see now? We've inversed this fair value gap. People want to be buying up. That is not the case, buddy. That is not the case. You could almost say that my manipulation was in the wrong place today, because I saw people buying off of this 1 minute inversion. That means their stop losses are here or here. Going back to my point, when we're all selling and the banks are buying, our take profits are down here and their stop losses are down here. Like, honestly, I don't even know what I'm talking about in that part, but forget about it. Anyway, go in with a reasonable stop. I mean, I like to risk $500 on combines, so that is 1% of the account. You got a 4% drawdown, 1% of the account risked in one trade. We end up coming down through this low, sweep it out. We end up coming through this low, sweep it out. Originally, I wanted my break-even spot to be here, but I anticipated, I left some room on the table. I didn't move my stop loss to break even here, even though I marked it out in the live video I recorded. I didn't move it here because chances are price has filled so many orders in this region here at, let's say this opening gap range here, this opening gap level. Price has filled so many orders around it. As soon as we take this liquidity and a bunch of people's take profits are hit, chances are we're going to have a tiny reversal to the upside to stop out more people, to have the fuel to carry on going to the downside. Now, I adjusted my risk greatly, or I don't know what word to say, but I started off with risking $430. I ended the trade risking $300 at that high. Kushti, man. I mean, that's a calm loss. I saw that we had a 1 minute change in state CISD get confirmed. We rejected off of equilibrium of the range. We trapped buyers in, targeting their stop loss. We had a confident draw on liquidity, and yeah, Kushti trade, man. As I said, this is a pure discretional trade. Like, you don't need to take it, because as we have a move like this, you can anticipate we're going to have a very choppy bit of price action afterwards. So cool. First trade, gone. Second trade now, I am out of the trade. I've lost $300 on the day, and I'm like, cool. This is going to be just manipulation after manipulation after manipulation. What I didn't recognize in this market was it was just baiting me out just as much as it was baiting everyone else out. You can see this little volume imbalance here. This thing happens like once in a fucking moonlight. Like, you never see a volume imbalance, and I decided to act on it today in some sophisticated way. Now, is it to do with my strategy? No, I don't trade off of volume imbalances. I don't know anyone who actually does, but I went off the bias that this shit never happens. So as soon as we close below it, we're just going to plow to the downside. I ended up oversizing after taking a loss. Now, that is my main mistake here. I can settle with a loss. That's cool, innit? But when you take a loss, when you can avoid it, but more so off of just some stupid decision making, like, you're going to pay the price. And the price that I paid today was losing another $780. What should I have done in this position? If I really wanted to trade it, keep a wide stop loss so that you have space for the trade to move in. And on top of that, risk down. What would I be doing on an XFA? What would my successful self be doing on an Express if I was in this position? Firstly, I'd probably walk off after that loss. Secondly, if I didn't decide to walk off, I would half the position size. What do I normally risk? 500. What should I risk here? 250 with a tight stop. That gives me the chance to make some extra profits from maybe leaving a runner on the table, because naturally our draws on liquidity are lower. We've got 2 previous day lows here resting. And internally, we've obviously got the main reason why I entered the trade. But hey ho, I mean, days like this happen, people. Days like this happen. You're not going to win every single day. And I'm not going to repeat the shit I said earlier about like losing balances out the statistics. Because realistically, if you can avoid a loss, you can avoid a loss. If you take an A-star setup and you lose, you haven't really lost, because you're building good habits at the same time that will make you money in the long run. Maybe not today, but you have a high likelihood of doing it tomorrow and the next day and the next day and the next day and the next day. So losing's natural, man. You just got to get over it. I made some silly mistakes today that I could have avoided, but I'm not going to beat myself up about it, because when I shed light to the shit that's not going to help me with fuck all, nothing's going to happen. If anything, I'm just going to go on a downward spiral and just blow my accounts. Has that happened before? Yes. Have I had positions where I'm on XFA accounts in this position? I'm on XFAs. I have lost the first trade, I've lost the second trade, and I'm like, fuck it, let's just throw this account in the bin. Am I like that today? No. So I did build good habits on the markets, because I did not build bad habits. Made one mistake. And yeah, hope you learned something from this video, and I will see you tomorrow.